So today we're going to be talking about CDs versus savings accounts, but stick around because we're also going to be talking about which one is going to be most beneficial for you and your ability to build wealth. Coming up. Hello fellow wealth builders, and welcome back to the TruFinancials channel. As I mentioned, we're going to be talking about CDs versus savings accounts. But first, if you are new here, my name is Dennis, and on this show, we love to talk about personal finance, investing, and retirement to help build your wealth. So definitely consider subscribing today, and don't forget to hit that little bell icon to get notifications when new videos and live streams go up. So the first thing is, what is the difference between a CD and a savings account? So a CD is considered a certificate of deposit. So that's what it stands for if you're not too familiar with the terminology. But what it really does is it locks in the amount of money that you want to put in for a certain given time. Now, there are different companies that offer different time frames, such as 6 months, 9 months, a year, 5 years, 10 years as well, and they give you a certain interest rate that usually is going to be higher than what a typical savings account gives you, so that way you have to hold into that money. Now, the big downside of a CD is that if you want to pull any of that money out, or if you need to pull that money out, you do get hit with penalties, usually losing out on whatever interest rate that they were offering you to have that money be on hold. Now, of course, that means if you are putting, a couple $1,000s away, you have to make sure that that's not money that you are needing for any immediate use. So the worst part would be having put away a couple $1,000s, having it earn interest, and then all of a sudden you needing that money and getting hit with some penalties. Now, it doesn't mean you lose all the money. Every company is a little bit different, so you do want to check up with those banks to see what kind of offers they have for CDs. And I know one of the common questions that come up typically when it comes to CDs is, can you add more money to whatever account that you already have with that CD? And the answer is typically no, you can't actually add more money into those accounts. You had to actually start a new CD with whatever amount that you have, of course hitting whatever minimums that they require for you to be able to open up those given CDs. All right, so before we continue, let me know in the comment section down below, do you prefer CDs over savings accounts, or one way or the other? Do you even like CDs? Let me know in the comment section down below. Definitely like to hear from you in the community. So the difference on a savings account, of course, is that you can actually add money into that savings or even take money out of it whenever you need fit, given that you withdraw with the certain limits that most banks have, which I believe is 6. But overall, you can do that where you can take money in and take money out whenever you please. But of course, you're going to typically have a lower interest rate. So of course, there's a couple different factors that come into how long you have to have that money set aside for, what that money is being used for essentially, and then also to how much you want to earn on that money. Now, of course, there are a lot of people that don't see CDs, such as myself, as a really good way to invest your money, but there are options out there for people that maybe do find it to be more secure for them, because maybe they don't want to take those risks of investing into like the stock market or real estate or any other means besides just the general form of being able to earn a little bit of money on interest. So what I wanted to do as well too is actually show you guys some of the numbers from a couple different banks when it comes to the interest rates that you can earn on a CD, and then also to kind of talk a little bit more about the interest rates that you can earn on certain savings accounts as well, because that might determine where you want to keep your money and what's going to be most important to you. So as I mentioned at the beginning of this video, not going over which one is going to be the best for you, just kind of giving you the ideas of which one can be beneficial for you. So if you're going to be needing money in the immediate future or in the near future, a CD is going to be not something you want to put your money into, because again, if you take that money out, you're going to be losing that interest that you're trying to gain. But if you're wanting to hold that money for long term, maybe you want to save up for a house and you have a couple $1,000s set aside already, you can put those into a CD, so that way you don't, one, get tempted to touch the money, and then two, you have it earning a little bit more depending on where and who you put that money with. All right, so we're gonna go ahead and jump here onto the screen, and what I did here is going to actually show you guys some of the interest rates from different companies. I pulled these numbers off on August 22nd, 2018, so of course these numbers can and will change, so definitely check with the banks if you are interested in looking at these interest rates. So the top one over here is going to be actually Wells Fargo. So I just wanted to show you some of the big banks and the interest that they charge you, which is obviously, as you can see here, not a lot. So they have 3-month terms at 0.05% interest, and I'm laughing a little bit because that's almost nothing there. They do have a bonus interest rate, which I didn't even look into why you can earn the bonus interest rate, but that's 0.1%. So that's not even a whole percent. That's a 1/10 of a percent if you get that bonus rate, which is nothing. And then it's the same thing with a 6-month rate, and then it jumps up if you do the 1-year rate. So if you do the 1-year rate, you get 0.1% on your regular interest, and then for whatever way to get the bonus interest rate, it is 0.15. That is honestly abysmal when it comes to having your money earn you anything, because at that point you're going to be not even catching up to inflation to keep your money in those couple of months. But of course, those are just a few months. I have another one over here. I'm going to do this apparently in real time. So this one is Bank of America. I'm going to try to zoom it over a little bit more. So you're going to see with Bank of America, they have interest rates for their CDs for 12 months on a CD, 13 months, and then 25 months. So the kind of odd numbers there. But for 12 months, you get 0.07%. If you do 13 months, you get 0.75, which is obviously way better just by adding 1 month on top of there. And if you do 25 months, it's 0.85. So that's very low in percentage of how much you can actually earn. It does show on here that these ones do require a minimum of $10,000. So you'd be locking in $10,000 for, 13 months, 25 months at a very, very low interest rate. So, is that really worth, having your money locked up? Now, if you're trying to save up for a home and, that kind of helps with the temptation we talked about earlier, that's great. But obviously these numbers don't really reflect a good earnings for you. So what I'm going to do is I'm going to show you some other ones here. So one of the ones that I absolutely love is Capital One 360. If you guys are familiar with that, that's the bank that I use actually to hold on to my savings for my sinking funds, because their interest rate is a decent one, at least as of the recording on this one, just for the regular savings account. So if you're needing money to kind of come in and out at any given point, that's fantastic. And if you're not too familiar, I will link up a video up here that you can check out with my Capital One 360 review. If you are interested in learning more about that banking service, you guys can check that out. But when we look over here on the CDs, you're going to see 6-month CDs is 0.60%. So that's actually less than what the interest rate is for the regular savings account. So it doesn't honestly make a lot of sense to put it in the 6-month or even the 9-month for that matter. Now, if you look over here, if you put your money in a CD for 12 months, you can actually earn 2.14% on your money, which is actually not completely terrible. It's not great, but it's not completely terrible, especially if you don't want to have any risks involved, like I mentioned with investing. And keeping your money for 12 months. So if in a year and a half, 2 years, you're going to be needing to, pay for a down payment on a house, or you want to have, that money set up for something else, you can earn 2.4%, which is more than what the regular savings account is in even the Capital One 360. But for whatever reason, if you go to 18 months, it drops it down to 1.75. But then if you go to 24 months, you're looking at 2.5. And then you see a bigger jump as you go, obviously a little bit more. So if you do it for 60 months, you can actually get 3% of your money. But that's, of course, a very long time to lock in your money, to not be able to touch. And then, like I mentioned, if there are times where you have to pull that money out, there are early withdrawal fees that you can see down here. And of course, you can go into the website to learn more about whatever fees they have, because every company is a little bit different. Some of them you lose the entire interest rate. Some of them you lose a percentage of that interest rate. So you just want to check with them and see what kind of things they offer for you in case you do have to pull that money out. And then obviously, to have some kind of context with a good rate is going to be with Ally Bank, which is also another online bank that I really do like as well. They offer very similar services as Capital One does when it comes to even just the regular interest rate savings, which I'm a fan of, just being able to have money earned in your sinking funds. But again, if you're looking at CDs, this is what they're going to have available for you too. So very similar with 3 months into a CD, you're going to earn 0.75%, and it does actually give you a breakdown to depending on how much you're putting down right here, but it doesn't look like it changes it too much until you go down a little bit further. So if you do 6 months, you get a 1%. If you do 9 months, you get 1.25%. And if you do 12 months, you get 2.1% for anything under 5,000. If you go above 5,000 to 24,099, you're looking at 2.35%. And then if you have $25,000 or more, you're going to get 2.5%. And then as you go further along the line down there, you're going to see 3 years and 5 years and what percentage interest that you can earn from those. So here you're going to see the CD in comparison to the Capital One. So it looks very similar as far as like the earnings. Obviously, the 12 months for the Ally is 2.1 for under 5,000. Capital One is 2.4 with no limitation, or at least it doesn't seem like there's any limitation. So again, you can always just look at the numbers based off of how long potentially you want to have that money set aside for versus, what the percentage on that is. So it looks like Ally Bank also has a no penalty CD, which I'm not too familiar with. I just saw this actually as I was getting the screenshots for them. But it looks like it's 11-month CD. If you have under 5,000, you can get 1.5% on your money. If you have a little bit more, of course, you can earn a little bit more money. Very curious to see what that is. You can check on their website. Maybe it's something where you can pull a little bit of money out without getting any charges on there. But that still is going to depend on your situation and what's going to work best for you. So those are going to be the differences when it comes to having a CD or a savings account. Of course, we went over some of the rates for CDs, and you can see that the interest rate is very low in comparison to a lot of different things as far as types of investments that you can be having. But of course, everyone's a little different when it comes to their investing tolerance, because some people might not want to be investing and take that risk of losing their money versus just having money set aside and getting a guaranteed 1, 2, 3% on their money, so that way they can have it for a future purchase that they're maybe saving up for. So take that into consideration on what's going to be important for you and your money, and when do you actually need to use that money. And if it's something that's in a short period of time or an unknown, having a savings account might be a better option for you versus a CD. So I hope that gave you a little bit more information when it came to the differences between CDs and savings accounts, and if that really helps out when it comes to deciding on where to put your money. If you have additional questions, by all means let me know in the comment section down below. I can try to help you out as best as I can. And as I mentioned earlier, let me know in the comment section down below, do you have a CD that you're currently using, or do you prefer not to use them because you don't like them as an investment strategy? Let me know in the comment section down below. I definitely like to hear from you in the community. As far as my opinion goes, when it comes to CDs, I'm personally not a big fan. I prefer to have my money in savings accounts, but I do understand the value of having money set aside to not cause you to want to spend that money, and it works for different people for different reasons. But never a bad thing when you have a certain preference over somebody else how to manage your finances. As long as you're intentional with your money and where you want it to go, and you have a great purpose for it, you are going to do well for your financial future. If you enjoyed this video, do not forget to hit that like button, and then don't forget to share this out with one additional person that can really benefit from this information. If you are not yet subscribed, do not forget to hit that subscribe button, and thank you so much, fellow wealth builders, for watching, and have a great day. All right, if you made it to the end of this video and you'd like to continue watching, I have 2 more videos for you here. The top one is going to be my most recent release, and the bottom video is going to be the one that YouTube recommends for you if you'd like to continue watching.